Hi friends, this is Brian Perry with Perry Home Solutions and Keller Williams Realty.
And Julie Perry with
And
Perry
Julie.
Home Solutions.
Julie is that that voice that's floating in the background.
The magic behind the scenes.
All right, V. So we're here today to bring you yet another Perry Home Solutions fabulous video, primarily focusing on real estate and the surrounding local area here in Palm Beach County too. I guess we should talk about that a little bit more.
Yes.
Anyway, but we have topics on the table. Julie,
Yes.
would you like to?
So let's start with VA mortgages.
Okay.
What is a VA mortgage? What are the advantages, disadvantages, closing costs, the whole thing.
Wow, that's a lot. Okay, you don't go through all that. Okay. So VA loans. VA is from the Veterans Association, I believe. Is that VA? Anyway, I'm telling you what VA is. I don't know what VA means.
Well,
right?
it might be from the HUD, but it just means
the letters VA are actually stand for something, and the V stands for veterans. I'm pretty sure I got that part down.
Yes.
Anyway, so it is a government-sponsored loan. In essence, it's government guaranteed, and it is primarily issued to veterans. Well, solely issued to veterans. Although we have a little twist on that we'll share after this part, right?
Yes.
So, but if you are a veteran, you may very well be eligible for a VA loan. And VA loans have some really interesting advantages over traditional loans, conventional loans, FHA loans, things of that nature. As a matter of fact, there's one major advantage, which is that a VA loan is a 100% financed loan. In other words, there is no down payment. FHA, as an example, has a minimum down payment of 3.5%. And VA's minimum is 0. And another question you had asked me is, what are the closing costs? So a lot of people get confused, especially if they're first-time home buyers and they're veterans, because when you hear VA and you hear 0 down payment, you think that means 0 money at closing, which it does not necessarily, because there are closing costs. And those closing costs can be somewhat substantial, by the way. I don't want to go into exactly what they are, but if you're looking to examine what the cost of getting a loan is, and it's not really exclusive to VA, every loan has closing costs. If you have questions about that, call us, or we might do a separate video to just talk about closing costs. It would be a lengthy one because there's a lot to talk about. But yeah, VA loan definitely has closing costs, and they're rather significant. So you need to be aware of that. Now, there's ways to mitigate it. Like, as an example, another thing a VA loan allows you to do is it allows the seller to pay the closing costs. I had to pause there. There was people having a very good time in the background. Had to figure out what that was all about. We thought we were missing a party, but we weren't, so we're back.
Okay. Now, let's talk about, would there be any potential disadvantages to a buyer by going VA loan?
How far did I get before we paused about the seller contributions towards closing costs?
We did not discuss that at all.
Okay, I was going there right when we stopped. So
okay.
a VA loan allows a seller to pay. Now let's not get this confused. It does not obligate the seller to pay. The seller does not usually pay. When you take out a loan, the closing costs are yours, and so the natural expectations are that you will pay them. And if you need or want a seller to pay them, we're asking the seller to pay them. And of course, whatever price that you might ask for a property, it would be that price subtracting the closing costs. So in other words, if you wanted them to pay $10,000 in closing costs and you were offering $500,000 as the purchase price, that would essentially be almost exactly the same as offering them $490,000. So you have to keep that in mind. But it is
from the seller's perspective, yeah.
Right. Well, right. Exactly. Well, it's very important because it's difficult to see it from all angles, especially if you haven't gone through this process before. Anyway, so you asked about closing costs, but then you asked another good question. What was that mean?
So we know the advantages, of course, 100%. You get to use your veteran benefits and all that. What would be a potential disadvantage of going to VA?
Well, a VA loan is a very good option. It's a very cool thing that veterans have access to. But there are definitely negatives. If you were able to get a conventional loan, if you wanted to put 20% down and not have any mortgage insurance, that's still probably a better option if you want to go that route. The real one major advantage to a VA loan is the fact that they offer 100% financing, which you pretty much can't really find anywhere else. That's very rare. So that's why VA loans are such great things. But I can't remember what I was going to say after that.
Could they potentially be like higher closing costs, is what you're saying?
I don't really think so.
Okay.
I mean, there is a funding fee that VA charges. And I don't recall what it is off the top of my head. It's somewhere in the realm of 1%. But I would say, closing costs are not cheap. And again, I don't want to get into a big closing cost thing because we could be here all day talking about that. But I don't think the closing costs of VA are excessively high. But you will have, whatever VA's form of mortgage insurance on the loan, which means every payment that you make will have an additional fee on it called mortgage insurance that you'll have to pay. And so, you have to take that into consideration. And the reason that people go 20% down payment, even in a conventional sense, is because they do not have to pay any kind of mortgage insurance. And that's the major reasoning behind it.
Very good.
Also, one last thing about VA, because we're talking about it, you asked what the negatives are. That's one thing, is that you have to pay mortgage insurance. Closing costs might be marginally higher, but I don't think that's a huge factor, but it's something to consider. The other thing is VA is a little bit more scrupulous about the condition of the home. Not dramatically. A conventional lender will not loan money on a house that is a wreck. Okay, so that is something you have to keep in mind. A VA lender, the VA loan requires the home to be in relatively good move-in condition. And so if there's any detrimental factors that exist, the VA will probably require them to be addressed. I don't find them overly cumbersome. These tend to be things that most people would ask to be addressed anyway, so they're not particularly unique there. And so that would be another negative to VA. But I don't think that's a big one. Yeah. Okay. VA is a really great program, by the way. We do a ton of them. We love helping veterans. And personally, even when I represent a seller and we get a VA loan offer, I don't look down on that. I think those offers are very good. Some of my favorite closings that I've had were with VA loans, and I've had very little problems with them. But there are advantages and disadvantages, there's no doubt.
Good. Let's talk about assumability on VA loans.
Yeah, so this one's really cool. And this one really has not come up in a long time because interest rates for a very long time have been coming down. So assumability wasn't really a factor. I guess we should define what assumability is.
Yes.
Government loans, generally speaking, which VA loan is a government loan, right, generally have some kind of clause in them that allows them to be assumed. And fundamentally, what assuming means is that rather than having to go through generating a loan from zero, having a lender create a loan for you and all of the expense and process of that, you can simply take over the existing loan that is already on the property, so there's no appraisal, and the underwriting process is much smoother. You still have to qualify for the loan. They're still going to review your income, your assets, and your credit, and they want to make sure, obviously, that you're capable and everything of managing that and making payments and so on. But beyond that, it's a much easier process, and the advantage to it is that you can assume not only the loan, but the current interest rate. That's the kicker.
Which is in this environment is probably the best, the most important thing, because now we're just going up and up and up.
Well, the thing is, for a very long time, we were going down and down and down. I remember back in 2007, 2008, 2009, interest rates are like 6-7% or whatever. Mm-hmm. And then from that point until basically a year ago, they just went down and down and down. And they really stayed down for a really long time. And they really didn't fluctuate that much. They were interest rate. We've been in a very low interest rate environment for a super long time. And now we're not. Now we're in a situation where it's the opposite. Over the last year, they've started to raise rates, and rates have gone up a lot. Anybody that's paid attention, seen that. And so if you find a property that's owned by a veteran that has a loan that they took out in the last, 1, 2, 3, 4 years, they probably have a rate that is significantly below market right now. And that means that the option to assume that becomes incredibly valuable, because you can assume that loan and save a huge amount of money on interest, right?
Right. So you could be getting, today, let's say the average is 7%.
As a matter of fact, after reading it, I was going to talk about interest rates as well if you wanted to, but interest rates right now are probably in the mid-6s. They've come down a little bit, but yes, much higher.
But let's say you could easily be getting a loan in the mid-3s
Sure.
or low 3s.
There's an awful lot of people out there that have bought a house in the last 4 years that have rates at or below 4%.
Right.
And you can't get a loan right now, much less than 6.5%.
Right.
You know, I heard a guy this morning told me he got a quote for 7.75%. I don't know what that was all about, but nevertheless, that's the deal. And so that's where assumability becomes incredibly valuable. If you're getting the same rate, assuming a loan is really, not really that big of a deal, but if you could save significantly on interest, it is a huge deal. Shameless plug. We happen to have a listing on the market right now with a VA loan with a significantly below rate.
3.3, I believe.
Yeah, 3.3% rate on that loan that a buyer can assume. And here is the really beautiful part. You don't have to be a veteran to assume it.
Yes, that is the best.
In order for them to obtain the mortgage, they had to be a veteran to qualify to get that VA loan. But in order for them to sell the house to you and allow you to assume that loan, it does not require you to be a veteran. You just have to qualify for the loan financially. That's pretty much it.
Yeah.
So cool option. And if you would like to talk about that, and specifically an incredible opportunity that we have right now to save a huge amount of money on interest, give us a call. And any other things that we wanted to talk about with VA loans?
I think that pretty much wraps it up.
Yeah. And we have some excellent VA lenders. So if you are a veteran and you want to talk about obtaining a VA loan, then give me a call because I have some really fabulous options for you to be able to not only get that loan, but save a lot of money doing it and make sure you're getting a really good interest rate because that's super important right now.